Alrighty, traders, this is Blake. You are listening to the Morning Edge, and we're going to go ahead and get started. Hope everybody's having a great, kind of quiet, go just ahead of the FOMC. I'm actually going to do some. I'm going to do some sock drawer adjustments today. Ahead of the FOMC. I think. I don't know if I'm not. I'm joking about that. I've actually got a list of 1,000 things I need to do that are not necessarily market related out of the Fed today. So I'm going to do that. But as far as today goes, I think today is really good because we're going to be able to set up, a pretty decent trading plan going into this FOMC. I gave you guys on the FA.C.E webinar a little bit of an idea of what I'm thinking, with some of these major pairs and also with some of these indexes like, gold, 1845, that's key. And I'm going to put multiple asterisks there. And as you guys probably have seen, and I'm actually going to flip it to range. And the reason why I'm going to do that, let me just take you over to gold really quick. Because today gold could move anywhere. I want to say it's bullish while it's above 1845, and truly, I think it still is while it's above the 200-day moving average. Shoot, here it is. But the problem that we have here in gold is if we break through the 200-day moving average, we could really this is a 40 pip, drop pretty quickly, right? So I'm not going to just move. I'm not going to just put in 1845. I'm going to put in 1840, which actually, or 1800, excuse me, which I might actually do a little bit more than that. Hold on. Let's delete this for a second. Low to high, 38% retracement comes in 1824. 50% retracement comes in at 1796, also coinciding with previous highs here. So maybe that 1800 is going to be really important. So I'm going to write down 1800 just in case you guys are like, you're like, well, hey, I want to play the gold trade if we break through 1845, which I understand. You might not even want to play the dollar. You might say, I just don't even want to play the dollar and just play gold today. And that I don't blame you at all. It's a clearer picture than the dollar index is at this point. Obviously, key resistance is at 1920. Now, if we get above 1920, which is obviously the 618 retracement, that's where I really want to be more bullish gold. The risk that I think gold has at this moment. I know I mentioned this to you over the last couple of days, but I'll say it again. The risk that gold has above the highs is that the risk that gold has right now is not getting above the highs, but is actually turning lower because the market is so it's everybody's been bullish gold. I mean, I actually have not seen one newsletter or video in the last couple of months that has been bearish gold. Not one. You guys tell me if you've seen anything, because I haven't seen anything. I've not seen anybody bearish gold. Everybody is bullish gold. So I think the risk is positioning wise that we turn lower here. Anyway, but again, I think gold's actually a cleaner picture than everything else. Let's talk the euro. So the euro is on its lows on the session. A break below 120.90 would be bearish. You guys know that's the case because that is the 618 retracement right here. Okay, so a break below 120.90 would be bearish. Resistance today, intraday, is at 120, and it's going to be that 618 retracement here. If we can get above 121.70, that would be bullish, because it'd be on the underside of this trend line. We break back above that. We break back above the 618. And then I think it's going to squeeze. So 121.70. Okay. I'm going to keep us in range. And this is the 618. They're both 618 retracements, by the way. This one I think is more important. Cable. So the 38% retracement of this low to this high comes in at 140.30. I think that is arguably more important than the 140 level. Okay. We break below that, the sterling would turn probably lower. We would start getting that it's a big double top, you know, idea, that type of thing. Yeah, that would. Gorkum says the commitment of traders says still 80% on gold. Yeah, I mean, I think I just think that the market is very bullish gold. Again, it's more sentiment that I'm worried about. You know, you read, oh man, I was going to buy the dollar Mexican peso about 1996 this morning. I just didn't. Look at this turn. I was going to be buying it down here. I was like, yeah, I should be buying it here. And then it just ripped up, man. I didn't. I'm just saying that I should have. Okay, sorry. Let's get back to it. Oh, since we're here on the dollar mex. Wait, did I finish up the cable? No, I didn't. Let's go back to the cable. All right. So resistance for the sterling. Let's mark up this channel resistance, which comes in right now at 141.50. I know we've been writing 142, 142.50, but I think that this is a channel. So let's be respectful of it. Aussie simple. 76.70. 78.20. That's the triangle, right? These are both very important because they represent the breakout point. Kiwi, 71 cents. I think we almost hit there last night. 2 days ago, sorry. 71.04 resistance. 71, let's call it 80. And by the way, you guys, I mean, this is pretty important because if we break through 71 cents in the Kiwi, we should trade back down to 70 cents, obviously above 71.80. Then it becomes a little bit more interesting, back to the upside, back to the 73-cent level. So again, these are all, in my opinion, pretty good breakout points for the market as a whole. Dollar Canadian. So we got to stay bullish to dollar Canadian while we're above 121.30. Our range extension takes us all the way up to 122.80, but first resistance today will be, oh hell, I'm going to write that down. But I'll write down 122.30. right here. Okay. Dollar Swiss, easy peasy. Now this, I know 90.70 is the 200-day moving average, but we're gonna write down 90.50 today because it's closer. Support 89.30. And also with the Swissy, do keep in mind we could actually dip to 89.11, which would be the 78% retracement, right? We've talked a lot about that over the last couple of weeks, how, you know, we're finding support at 89.30, previous neckline here, but we could dip just a little further. Just like resistance here, we could rally just a little bit higher at 90.70, which would be the 200-day moving average. I might as well write it down. I mean, I guess we can do that. And then here would be 89.10. It's actually 89.11, but you know, close enough. USD Norwegian krona. As I was just saying in the chat room, if you guys are bears for, if you're a dollar bear, you should be shorting the US dollar Norwegian krona right now. If you're like, there is no freaking way on God's green earth the Fed is going to disappoint the stock market today. They're going to stay dovish. They're going to stay, you know, defensive, blah, 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 blah. If you feel that way, you should be shorting the US dollar Norwegian krona right now. But I feel breakouts looming. $8.42, $8.24, but you guys know we've come out of this wedge, and a break above 8.42 would be bullish. We turn instantly bullish above there. We break below 8.24. I think we got to target lows. Actually, that's important. Okay, there we go. I think that's correct. Dollar peso. What a big rejection at 920 yesterday. 1920, I'm sorry, 2020. At 2020 yesterday, big resistance. So we have 2020, 2030, which is actually key. Support. I still think support's at 1977, 1978. What have I been writing? 1978. I should probably write that 1955 down too, because just in case the FOMC is, if the Fed is just really dovish and it looks like they'll never ever raise rates ever, then maybe the dollar Mexican peso darts down to those lows, right? Okay. You guys got to watch this Rand. I don't trade this that often, but I wouldn't mind being long if we break out. I mean, this is a serious beatdown since post-COVID lows. Like I said, I don't trade it often, but if it breaks through that, I'm going to get long. Gorkum said the U.S. dollar Mexican peso. Don't forget that, or he said, I forget that that's a Wyckoff. It is. I'm telling you guys, today everything is set up for dollar bulls. Oh shit, I didn't want to do that. Sorry, I just all my. I hate it when my windows do that. I gotta. Sorry, I gotta get everything set back up again. Sorry, guys. Sorry. Okay. All right. So, Wyckoff. Yeah. Again, I'll reiterate. I think that we are here. That just happened, right? This is there. That is somewhere up here. So I think this is going to be right here. That's the way I'm looking at it. But that doesn't mean it's going to happen. That's why I'm approaching the dollar Mexican peso more on the bullish side from here. Okay. Where am I at? And then I got to let Steve and Stelios take over here. Dollar yen. Triangle setting up. It did hold overnight. I dropped this trend line down here yesterday. You can see in the basic technical analysis last night. You guys all know that I update every evening the end of day analysis. That's typically me, right? Unless I happen to be traveling. The highs today may be holding the upper end of a triangle, and this could mean the 110.25 level is significant resistance ahead of the FOMC with key support at 1920. Now, and that's key support right here. Trendline support would be at 109.35, right? Oops, that's not what I wanted. So I'm still going to write down 109.20, but if you guys are trading the dollar yen, 109.35 could be the trend line. Oops, let me get rid of this. Dollar index resistance 91, channel resistance, support 90.30 and 90.90, which would be channel support. You guys already know that, right? From the FA.C.E webinar. Let's say we're in a range. Silver, Bitcoin, and S&P. So S&P. Ascending wedge. If the Fed disappoints today, we're going to challenge this support. And this is the 50 DMA too. So, that's actually pretty important now that I'm thinking about it. This 50 DMA, you can see how well it supports the market, generally speaking. But this is also ascending wedge support. So that means that 4170 is critical support for S&P to hold. 4170. It's so critical that I'm going to do this. Add alert. Blake, look out. Okay. I set an alarm there. Okay. At 4070 because I think it's really important. Because if that breaks, my whole how I'm approaching the market's going to shift pretty bad or pretty big. Okay. Resistance is at 40. Well, 4030 is or 4300, excuse me, is the 127% extension. Obviously, we could extend even further. If the Fed's just dovish, we should see 4300 today. And we have to stay bullish while we're above that 4170. While we're above there, we have to stay bullish. We just have to. Silver. 38% retracement comes in at 2681. Resistance right now is 2830. Bitcoin, we were talking about this in the chat room. We're like, man, all these people got sucked in above 40K. They are paying the piper now, right? And, you know, they got sucked in buying this, you know, above 40,000 the last couple of days. They got stopped out. So now that means that a break. So here's resistance, support, a break below 38.4. Previous resistance, that should act as current support, a break below 38.4. Probably bring in some selling. 42,500, you know, that's the 200-day moving average. That's important. I'm going to go with, because we're failing at 40,000, we have to stay, bearish while we're below the 200-day moving average. I'm going to flip back to bearish because you can see that the daily charts, I mean, we tried to get up there and we just were failing, you know, and really, if you look at, you know, horizontal resistance, that's holding. So, I don't think Bitcoin looks bullish at all. I think it's bearish while we're below this 200-day moving average and all this previous resistance, previous support, current resistance, you know, it's trading heavy. Okay. So, there is your bias chart. I'm going to leave it to Steve and Stelios. And matter of fact, Gorkum, I think I'll let Steve address your question there, or Stelios address your question. Good morning, guys.
Hello, hello.
Hey.
Hey, so Gorkum asks, what if the Fed says wider capacity in the overnight RRP?
Reverse repo.
Is
reverse repo? What?
Yeah, reverse repo.
No. Actually, no.
Does that mean talking about tapering? Does that mean talking about tapering?
Well, if they, you know, the situation at the moment is the banks are flush with excess reserves and they're depositing it basically to the Fed in exchange for securities. And the problem is that the reverse repo rate they're getting is, actually, I don't know what it is, but it's not very negative. It's not negative. So what if the Fed makes that prohibitive for them? Then what happens? Which is a good question. I don't know. If anybody wants to hazard a guess.
Yeah, but, I don't. I don't, but I would assume it says wider capacity in the overnight reverse repo does that mean talking about tapering? I mean, if you're tapering, you're reducing capacity. Why would you be widening capacity of the overnight rates?
If we're talking about reverse repos, you absorb more liquidity like that.
Yeah, but if they say wider capacity and absorbing more liquidity, that's not tapering.
No, it's not tapering, but you make it easier.
Opposite of tapering.
No, it's not the opposite of tapering. If we're talking about reverse repos, it's not the opposite of tapering. But it's also not the same as tapering, on the other hand. It's one way to remove more extra liquidity than they do at the moment. But it's not the same as tapering. Tapering is, in fact, doing the exact opposite of quantitative easing. And what is quantitative easing? We all know what quantitative easing is. It is, in essence, buying more securities and increasing their balance sheet. So the opposite would be unwinding their balance sheet, and that has nothing to do with it.
Got
Yeah,
it.
and
Okay.
remember, it's the excess reserves of the banks that are used
Yes.
for the reverse repo, which is not something they can actually go out and lend. So
Yes.
it has very limited. I don't remember the mechanics of it, but it's not as simple as I can either give it to the Fed or lend it out to XYZ for a mortgage. No, you can't do that. So it's a bit more tricky.
All right.
Anyway.
Well, hey guys, I'm gonna let you take over. I've been sitting at this desk for about 3 hours since
Lucky you.
3:45 a.m. and I need to get up and go walk around. Amira said I need to take a nap. Actually, what I need to do is I need to go
walk the dogs.
I gotta let my dogs out and go refresh my coffee a little bit. So
who let the dogs out? Blake.
Huh? Yes.
Who let the dogs out?
Yeah. All right. So good luck today, everybody.
Thanks,
I'll see you all in the chat room. Oh, I'll see you during the daily roundup, actually ahead of the Fed. So I'll see you guys there. Okay.
All right, Blake.
You'll be sleeping time between now and then anyway.
All right. So we talked about the Fed and what they might do today on FA.C.E.
Or what they might not.
They might not do. It's a bit of a coin toss at the moment. We had some data worth mentioning. UK CPI, 2.1% year on year. Last print was 1.5, expected 1.8. And in the same way, and how do I say it? Anyway, following the same path as other countries, we have higher than expected inflation. PPI input, 10.7% year on year. That's very nice, healthy number.
Very healthy, yeah.
And remember, we had average earnings up to 5% yesterday, or close to 5%. So it's all going higher. And Canadian CPI also 3.6% year on year. So it's either going to be transitory in the whole world, or it's not going to be transitory. So the world seems to think that this is going to
I know
away.
I keep repeating myself, and sometimes it might be annoying, but it is very, very important to distinguish. And me saying again that the choosing of words is not random. They're chosen because they're deceptive. Same as the term transitory inflation, right? Because the transitory rate of which inflation is increasing, the rate of inflation increase might be transitory, but inflation itself, I mean, in the sense that it's being used nowadays in the price increases, is not transitory. It would only be if we assumed that next year we would have negative inflation, negative rate of price increases, which would in essence nullify what is happening this year. But we all know that there's absolutely no chance that that's going to happen. So whatever price increase we are experiencing now, even if the rate of increase decreases, is here to stay forever.
Yes, exactly.
Forever.
Yeah.
So if we manage to have 1 year of 6, 7, 8% inflation, and who knows what the real one is, we're going to pick up next year from where we are. And imagine everybody's like, even if we assume that next year we're going to have a 2% inflation, okay, let's say we're going to have 2% inflation next year. Imagine how lightly we take the fact that our purchasing power might have ended up getting reduced 6, 7, 8, 9, 10% within a single year. And we say that very lightly, right?
Yeah, this is very similar to the way people look at the PMI numbers. And it's like, oh, we were down in the 30s and 40s for weeks and weeks over COVID. And then we go back to 50 and it's like, oh, we're back to normal. No, we're not. We're just
No.
we're not dropping
We're
anymore.
not dropping anymore from where we dropped at. Yeah.
Anyway, you're absolutely right. And, unless we get negative inflation numbers, so deflation, basically, this is here to stay, exactly like you said. And you're right that people are just so nonchalant about it. Yeah, okay, it's okay. We're going to go back to 1.5%.
Partially because they're not properly educated in what it means, right?
Well, maybe, yeah. Anyway. So we had some pretty decent inflation data from UK and Canada, and it's likely to continue pretty much around the world, and especially the countries that reported properly. Fed is what we're waiting for today. Meanwhile, crypto's a little bit lower. Metals don't know what to do yet. The dollar doesn't know either. We're basically just waiting for a few more hours, and then we see bonds, slightly lower yields, but really nothing.
Listen, I've said it before. It's not that technical analysis can predict, outcomes of, press releases or fundamentals or whatever. But I'm going to say once again that looking, for example, at yield, since you mentioned it, and yes, they are a super, super important component of, what's happening, right? I've said before that clearly this market is, absolutely completely distorted. I mean, how do we know this? I mean, we're seeing last 3 months in an annualized basis, we've seen inflation in the US of close to 8%. And people supposedly are still willing to lend their money to the US government for a fraction of inflation. Which of course, proves that this is not a real market. But irrespective of that, with whatever value this market has, technically speaking, I mean, this move still looks extremely corrective to me. Look how much time we've spent, like, slightly depreciating over time in this descending channel. So if I had to look at this chart and make an educated assumption of what could happen following the Fed, I would say that it would be a very good point in time for this correction to be over and see another leg higher. Let's see.
Yes, I think By
the way, the 30-year looks exactly the same.
Yeah, I'm with you. I think yields are going higher eventually. They have to go higher. So let's see what the Fed brings us. I'm still looking to short bonds and treasuries, but not at the moment. I'm still trying to debate with myself where the proper entry level is. But
that's a good question, and
but my bias is bearish, that's for sure.
Yeah.
Otherwise, it's been very, very quiet. So I mean, the only currency really that's moving is the krona. So Norway is losing a little bit of ground, but really ahead of the Fed, it's just noise.
Yeah, it doesn't mean anything, and to be honest, it's all noise because USD NOK is higher on the day, but still below this 841, 842 resistance area. And who would be buying any dollar pair ahead of the Fed being at resistance, or oppositely, if it was at support, same deal, you know what I mean?
Yeah.
Unless you think you have the ability to predict what they're going to say and how the market is going to take it, because it's become, now that everything is micromanaged to detail, and now the market's expectations have been set so high over time, having to do with dovishness. Sometimes you can't even be 100% sure how the market is going to take something, meaning the Fed will probably try to get out, release a dovish statement, and yet market participants that become even more greedy having to do with dovish requests might find something they dislike in there, something minor or some minor wording change or whatever, and still get disappointed by it.
True. Yes. Okay. I don't have anything else to say. Let's have a look at a few questions, or if you have anything you want to show.
Yeah, I'm just going to show a few important charts. Not that they've changed since yesterday, and it would be weird if they did, because the first thing we said yesterday is that it would be extremely unlikely to see technical breakouts ahead of the Fed, right, for obvious reasons. So, and I'm now even more certain that we're not going to see them until we actually get the Fed later today, the FOMC statement later today. So we already said USD NOK is near resistance. The same thing applies to USD CAD. Aussie Kiwi still consolidating in ranges. The cable, you remember we talked about it yesterday, that at the lows it found support. It has held that support. In my opinion, it looks very, very nicely positioned for a continuation higher. So, from a risk reward perspective, it looks, perfect to accelerate higher from there once again. And I mean, it spent a lot of time consolidating in time. And the DXY also looks very well positioned for a resumption lower, right? We've had what looks so far a corrective rebound. We're near the channel trend line resistance. We're at the 50 daily moving average. So in my opinion, if the Fed succeeds in what they most likely want to do, which is issue some kind of a dovish statement that's going to, signal to the markets that don't worry, everything is all right, we still have your back, so on and so forth, the logical assumption would be to see the dollar sell off once again, equities probably remaining very, very, very well bid, might be the catalyst to break out from this wedge. Now, I have to admit that if it wasn't for the Fed, if it wasn't for the catalyst being the statement of an institution that I know in advance is extremely dovish, just technically speaking, I would really favor a breakdown from this wedge today to see a more complex correction. We saw a higher high, but momentum is really lacking. I would love to see a lower low, and once people start getting bearish, then seeing a continuation higher. But I'm fully aware that these two things can happen most likely at the same time, meaning we can have a very dovish statement that's going to cause the dollar to sell off, and at the same time seeing equities sell off, right? The possibility of these two things happening together is as close to zero as possible. So one of the two can happen and not both of them, right? Meaning if we do see dollar selling off because of the statement, most probably at the same time we're going to be seeing equities accelerating higher because of the same statement. And there is a lot more room to the upside now that we've spent some time that the rate of increase has been slower than it was. We've gained some distance from this formation trend line resistance, right? We have like almost 200 handles of upside and still be within this formation in the case of the S&P. VIX has diverged slightly the last 2-3 days, but very frequently divergences in the VIX and the equivalent indices for other stock markets, can be divergence for a long period of time. So a divergence of 2-3 days doesn't necessarily mean anything. But there is a pocket of air. I mean, we break through 15.5, there is a pocket of fair until we go down to 11.75, right? And this can actually happen, right? So, one of the two has to happen today, and we're going to find out which. Now, admittedly, there is a chance that we're going to see a statement that we're going to know immediately what it's going to produce. You see some mention that is unexpected in the statement, having to do with, for example, the Fed being more um, aware of the possibility of having to do something about inflation, or some kind of a statement that puts a little bit of a question mark about the transitory nature of the inflation spike, or whatever else is going to change the market expectations about the rate path. I think you should immediately be cognizant of the fact that I don't know how strong the dollar's reaction is going to be to the upside. It might not be really strong, but probably equities are going to sell off, and probably really strong for recent standards, right? Because we've even changed the standards of what a proper sell-off is in equities. So keep that in mind. Now, absent of any of that, logic says that the market might spend some time digesting the information, but most likely once that happens, as I said before when we were having this conversation in the F.A.C.E webinar, most probably people that pared back their positions are going to pile back on the same positions, meaning being short the dollar, long risk assets, and that should within as the day passes have an obvious effect in prices. So yeah, more or less that's what I think. And technically speaking, nothing has really changed since yesterday. I know that we always have, for example, questions about precious metals. Nothing has changed with precious metals as well. I still believe there is a very, very good chance that gold is bottoming out here, because I'm monitoring this channel. So, we get what is most likely to come to us, a very dovish statement. Probably the gold market is going to fly higher from there. Same thing with the silver market, which seems to be in a symmetrical triangle, which, is a textbook consolidation. And, given the direction of the previous move higher, it should break to the upside. Platinum still weaker than the two of them, but I still think that we might be getting closer to to finding a low there as well. Palladium seems to be eager to break out. As you see, it was breaking out earlier. It has now pared back some of its gains. We are toying around with breaking this channel's resistance. Copper has diverged a little bit from palladium, because at some point they were really very well correlated for a short period of time, but it's still within what looks to me like a corrective channel. So bottom line, I think that the vast majority of assets are well positioned for continuation of whatever they were doing before we started approaching the the moment of truth, which is always like the Fed, right? Because inflation data, for example, are important. But the moment you get inflation data, then the market immediately switches its focus to the Fed, wondering, okay, yes, we have very strong inflation data, but how is the Fed going to react to it? Because that's what's mostly important, right? Now, I was talking about for several days about the next upside target in crude being 72.5, and guess what? We did reach it. We did hit 72.5 earlier today. So, this, as I said, this move has now clearly surpassed the point that risk reward favors longs. Now, I'm not making the assumption that crude is going to roll over and die from here just because we hit an interesting target. I mean, it's bullish as long as we're not seeing anything else, right? And the next upside target, as I've said, is at 74.60, and we are some distance from that, right? More than $2 away from that, and we might easily hit that target as well. But I wouldn't be buying this here, not anymore. So keep that in mind. Natural gas, yes. There's a question about natural gas. Now, so natural gas broke out of this trend line resistance, trend line of what looks like a nice symmetrical triangle, and we're now backtesting it. So let's see what happens from here. As long as we hold this retest of this trend line support, keep looking higher, as simple as that. Let me see, any more questions? My pleasure. That's it, more or less. I mean, this is my recap. So I'll be more than happy to answer any more questions you have, guys, girls. SLV. Yeah. Unsurprisingly, right?
It's just like silver.
It's just like silver, yes.
Only it's paper.
And, yeah, it doesn't really matter if you want to draw. If you just focus on it short term, I mean, forget the bigger pattern. You have the same thing we saw in silver, a symmetrical triangle here, right? And that favors most likely a breakout to the upside once again. And of course, there is the bigger pattern as well, which is like a bigger symmetrical triangle. But as Stelios said, I find absolutely no reason why you should trade this instead of spot silver, right? Or anyhow, trading one or the other is one and the same. There is no chance that one is going to do anything different than the other one is doing. So technical analysis on both of them is exactly the same. Anything else, guys? Carls? KRE. Nothing new, right? We were at resistance. I said we either break out or we get rejected and spend more time consolidating in this triangle, as it seems the market decided to spend more time consolidating in this triangle. So you have to remain patient here, right? You can't know in advance how long the market is going to decide to consolidate here. It might spend even weeks, being trapped and coiling before we break out. I mean, there is no way of knowing. But what we do know is that in the cases of consolidations like this, you're very lucky to have very, very clear levels. And when a market has spent much time coiling, you know that once it breaks out, most likely it's going to pick up in momentum afterwards, right? So once it breaks out higher or lower, I still favor the upside break. It's going to probably accelerate in that direction. So, breakout trading in these situations most times is, is a good approach to the market. I think it's a good trading opportunity. Weeks. What is weeks? Stelio, any idea what this is?
I know Wix is a company that makes websites. You can make there you go, websites company, yeah.
Is it a company that makes websites the same way that MicroStrategy makes software?
It's one of the most popular ones. You go if you want to make a website very easily. They give you these tools. It's all online.
Yeah, got it. So they've automated it and make it simple if you want a simple solution.
Yeah.
Listen, Wix is not easy. Wix is not easy. That was the easy move there out of this triangle, right? One last leg higher, as we've said many, many times. That was the easy trade. Now we're in some type of correction here, but it started getting really wild, having to do with the swings of this price action. If I had to bet, I think it's not done. I think it's not done. Yeah, I think it needs more time. Siva. What is Siva? Oh, this looks really bad. This looks really, really, really bad, right? And now again, some type of a bearish consolidation, I think, here. I think this looks bad. Very high chances that we still have more downside in this market. Yeah. Yeah, I wouldn't be buying it, I can tell you that much. Wheat. I'm not sure what's happening here. I'll tell you why. The big question I have here, is this one bullish consolidation? Or is this one bearish consolidation that says we need one more leg lower before higher? So, these are the two scenarios I see here. In both cases, I expect more upside. Okay, so let me make this clear. In both cases, I think more upside is very, very likely. The question is, are we going higher from where we are, or do we need one more leg lower before we actually can go higher? I wouldn't be trading it at the moment, I can tell you that much, right? Because it's not clear. GE. Bullish. And might be bullish from here, literally here. There is also the chance that we're in some bigger consolidation like this. But in any case, bullish trend, very strong bullish trend, right? And we spend the period consolidating now. As long as we trade above this trend line support, which we're not far away from, I think you should keep looking higher. Snap. Snapchat, I'm assuming that is. Whew. Last time I had a look at Snapchat, it was a long time ago. This is what I would favor in Snapchat. This is what I think is most likely to happen in Snapchat, because this price action here is not impulsive and it's not bullish. I know it's been bullish overall, there's no question about it. I think there is more downside to go, or at least more consolidating before we can move higher. So I wouldn't be bullish Snapchat in no way. If I was to do something with it, I would be selling it against the recent highs. FSLR, and then I'm going to have a look at the Canadian Indian rupee as requested. We're actually going to have a look at both the USD Indian rupee and the Canadian, since you want. I mean, since we're going to have a look at the Indian rupee, why not? But let me finish with this FSLR. Yeah, there you go. Nothing has changed, right? You can see it here. We can redraw just slightly this trend line. There you go. So nothing to add here. There is a very good chance we've seen the low, right? It's not certain. We haven't broken out yet, but there is a good chance. Now USD INR and Canadian INR. Here's USD INR. First of all, as you see, it's been moving perfectly, right? We drew that several weeks ago, and it literally follows so far the price action I had in mind. We came very close to the channel's trend line support. You can't be perfect, but we came very, very close, and we've been rebounding since. Now, keep in mind that oversimplistically, I said that we find support and we might even end up breaking the upside. But as always, I have to say that any type of price action within this channel is likely, right? So we might just keep on spending more time consolidating in this channel. But this channel looks to me like eventually we're going to break higher. So nice reaction from getting close to the bottom of the channel. Clearly the more we move towards the center of the channel, the tougher it is to trade this. Look at the 50 DMA and the 200 DMA being parallel, horizontal, I mean, parallel to each other almost, and very close to each other. What does that tell you? It tells you that there is no trend. When you see a fast moving average and the slow moving average, being almost on top of each other and horizontal, it's another simply geometrically simplified indication that there is no trend here. So you need to respect that, right? Now, having to do with CAD INR, last time we had a look at it, I expected a failure from there. We did have a failure, but the price action and how it evolved following that failure is not bearish at all, which should make us reconsider that perhaps we're not going to see lower prices. We're just correcting in time before we move higher. That's what I think. As long as we trade above 59.80, you have to remain bullish. We're probably correcting in time rather in price. Okay. Stelio, Fed meeting in, what is it, 3 hours, 45 minutes? Do I remember right?
Correct, yes.
Yeah, 3
Yes.
hours, 45 minutes.
Yes.
I don't know if you can call it a flag. It's a pennant. It's in any case most likely a bullish formation. It can be a flag. Flag would look like this, right? It can be a pennant, which is looking like this. In any case, as long as we, trade in the way we're trading at the moment, yes, I'm assuming this is a bullish consolidation that's going to break to the upside. REGN. What is REGN? You're full of surprises, guys. Regeneron Pharmaceuticals. Okay. Now I'll tell you what my problem with Regeneron Pharmaceuticals is. My problem is it looks like it has found the bottom in what looks like an almost perfect corrective move lower. Just look at this. I mean, this is textbook, right? Impulsive, strong move higher, corrective, slow move lower, retraced between 50 and 61.8% of the move, right? Yet, there is one thing that troubles me. And it's the fact that so far, the rebound higher doesn't have impulsive characteristics. So I would be really careful here because we might be looking for a more complex correction before we're done, right? Unless we see momentum picking up from here and we break this channel, in which case, it was just a slow start to the new bullish leg. But as I said, I would be very, very careful here. I don't like the type of price action we're seeing at the moment for the beginning of another bull leg higher. And Moderna, yeah, it might just still be bull flagging here, right? It might. Most likely it is. If we focus on the recent price action, I would have to characterize this oppositely from the other one we're looking at. I would have to characterize this as an impulsive move higher, even when parabolic at the end. So I think most likely higher, right? Okay, guys and gals, we're going to be back today with the daily roundup, and we're all going to be in the chat room for the FOMC and the ripples
Reaction.
that's going to create. Yeah.
Thanks,
So
Steve. Thank you,
thank you all.
everybody.
Have a great rest of the day. Bye bye.